Well, and welcome to today's edition of the coverage of the U.S. non-farm payrolls. It's March 9, 2018, and my name is Alejandro Zambrano, Chief Market Analyst with Trade Captain and Amana Capital. So we should be live. Yes, I can see that we're live. So guys, thank you so much for joining. In the next 12 to 20 minutes, we're gonna take a look at the US non-farm payrolls. The actual numbers are gonna be out in exactly 12 minutes, which gives us enough time to explain what this is all about and which levels and numbers we should look at, and to uh, take a look at some setups and see if there's anything interesting to trade on the back of the numbers. Now, before we start, I am gonna provide you guys with live coverage of the market. So I will provide my view on the market, and as well, I'm gonna provide you guys with some live technical analysis. But it's really important to understand that this is not like most other things in life. This is speculation, and speculation means that we're gonna take a bet or a guess on the market, giving the limited information that we have, and then we're gonna try to speculate. Now, so it's not like, baking a cake or building a house where you can just follow step by step, and you will most likely end up with the results you're looking for. Not saying that it's easy to bake or to make a house. I'm not good at either, but you get the picture, right? So you need to bear that in mind and need to understand that trading financial markets unfortunately is risky, and we could potentially lose all of our invested money. Not obviously that we want to do that in one go, but you never know, people do crazy stuff. So for more on this, click here on the risk disclosure statement to read more about the risks involved. Okay, good. So non-farm payrolls, guys. Very straightforward. Like, why is everybody excited about the non-farm payrolls? Well, the reason for that is because it's a labor market indicator that let us know how the US economy is performing. All right. So if the numbers are good, more people are employed, and if more people are employed, then yes, of course, the economy is doing better, and maybe the US is going to increase rates faster than everybody else, and then you could potentially see a stronger dollar. At the same time, if the numbers are lower than expected, that tells us that the labor market is not as good as economists anticipated, and that could cause the market to actually soften. In the case of the dollar, in the case of US stock markets as well, they could soften a bit, and crude oil prices as well. So the numbers we're looking for, you'll find them here in the economic calendar up here. So I'm going to use the economic calendar from Trade Captain, but I also have access to a Bloomberg terminal that I'm going to be using to quickly relay the data when it's out. As you can see here, there's a countdown, and the data is going to be out in exactly 9 minutes. So what we're going to do today, we're going to look at the numbers from Canada and the numbers from US, and hopefully use that to figure out some sort of trade ideas. Okay, so these numbers, they're compiled usually by just asking a number of economists. You see the Bloomberg or Reuters that do them, and they come down to this number. So the anticipated headline figure for the US this month is that the US economy created 200,000 new jobs. Again, higher than that, the market's going to gain. Lower than that, the market's going to decline most likely, or the dollar. The unemployment rate, we're going to look at that as well, but it's something that is very stable and doesn't move too much, so people don't pay too much attention to it. And then the other thing we're going to watch is average hourly earnings, which is just exactly as it says. It just shows how much more people are getting paid in percentage. Last month we saw a nice rise of 2.19%, which should eventually lead to higher inflation in the US as more and more people have higher incomes. They can spend more money on things they want. So again, better numbers than 2.8 should most likely cause the market to gain. And for Canada, you have very similar numbers, which is the net change in employment, but you don't have the labor market numbers. Now, what should surprise the markets? Well, this is just some printouts from Bloomberg terminal. And again, I said 200,000 is pretty much what people are looking for, but according to Bloomberg, and this is where it becomes a little bit tricky, but it doesn't have to become tricky. But according to Bloomberg and their latest estimate, they think that, or the median estimate is it's 205. So we're gonna work with that one. So again, here they tell us they have 78 estimates from different economists. And here you can see the distribution. So you'll see here that a few think, I think maybe one think is going to be closer to 155, one thing is going to be closer to 300, and then you have the majority here at about 175, all the way up to about 235. So this is the distribution of these 78 estimates. Now they have done nicely here some sort of a bell curve, and the idea is that if the numbers are lower than about approximately 185, then this should be bearish. So a number lower than 185 will surprise a majority of these economists, and that should potentially lead to just a lower dollar, just because it's a number that people didn't anticipate. So 138, 178 is the lower number. The upper number is about 230. All right. So within that range, if the numbers don't deviate from this range, we might not have a big move in the markets. Of course, we are going to take a look at wage growth as well. Wage growth for the U.S. is anticipated to be 2.8. So 2.8 here as well. So we're going to look at that and the non-farm payrolls. In the case of Canada, the median estimate is 21,000, and the lower estimate here is about 14.6. So anything lower than 14.6 should be surprising most people, and I would argue, I'm going to disregard the way this is set up, but anything higher than 26 should be good numbers. Now here you can see it's a totally different ball games. Here, this far more or less bars is just because they only have 14 estimates here. The one that is the best thing is going to be 20, which is pretty much what the market anticipates. So now we know that. Let's go back to the charts. Okay, so there's obviously when the euro, if the dollar gains on good numbers, that will be one I set up. The other one will be if the numbers are bad and the dollar softens. So I'm gonna look for ideas where the dollar could gain in case of good numbers. So I prefer the pound dollar. Why? Because the pound dollar is already in a downtrend like this. This is a lower high here, then you have another lower high here, then you have a high here. So we're creating lower and lower highs. So this market is already primed for a decline. Okay. Now, if we have a break to this low, which is 137.80, it will be a continuation of that downtrend. Okay. So I like this, and here, if I suspect that if we go below here on bad numbers, trader is going to sell. Stop loss order is going to be up here because that's the last high, so that's 64 pips. So risk 64 pip to potentially make 68, and maybe even more if the market continues to decline. So the dollar CAD is a good pair for dollar weakness. Dollar strength. Now the other pair that I like is the dollar CAD. This is the dollar CAD. Dollar CAD is trading sideways as well to some extent, and if the Canadian numbers are good, or if the US numbers are bad, we could have a break to 128.61. This is a little bit more complicated just because of the fact that we have numbers coming from Canada, and that could of course create a problem. So you might say, why don't we trade the euro? Like, euro is like bread at the dinner table, right? Or it's like the standard of what everybody trades. Yeah, we can trade this as well if we want to. However, for me, I don't think it kind of satisfies what I'm looking for. Firstly, it's already breaking down before the numbers, and the other thing here as well is that it's not really in a very strong trend. it's trading sideways here, and it's been doing that for quite some time. So because of that, I actually don't find this an interesting pair. Another pair is the dollar yen, right? So the dollar yen already moved quite a bit already, and obviously if the numbers look bad from the US, then the dollar yen could move lower and just be capped by this high here at 107.93. But from a sort of short-term scalping, it's not really ideal. Risk-reward ratios and things like that, I don't like that, because when I'm looking to trade these kind of events, I'm primarily looking for trading, in this case, with the trend and some sort of a narrowing of the range. So that makes dollar CAD and pound dollar the most interesting. Now it is possible as well to take a look at other pairs. So we can now take a look at Euro CAD. But Euro CAD as well here, it really declined so much already yesterday. If the Canadian numbers are good, it doesn't mean that the euro needs to go lower. Pound CAD, yes, pound CAD here, this is actually interesting for bad numbers from Canada. So take out this high and the numbers can go to the upside. Okay, so let's just focus now, and I'm just gonna prepare my 3 charts. So here is the pound dollar at the top. Here is gonna be dollar CAD, and here is gonna be pound CAD, like that. Let's hide this. Okay, so the number is gonna be out in 10 seconds from now. Okay, 10 seconds. Okay, so just waiting for the numbers to hit the Bloomberg platform. Okay, so bad numbers from the slightly worse off numbers from Canada. So Canadian numbers not too good. US now from payrolls. US now from payrolls. Very good numbers. So good numbers from the US, slightly worse off number from Canada. Wage growth, let's take a look at that. Wage growth 2.6. So 2.6. So actually it's a mixed report from the US. 2.6 wage growth is not good. 2.6 is not good. But the headline number is 313. And the unemployment rate from the US is let me see here if I can actually find it, 4.1. So it's actually not too good numbers from the US. I would argue not too good numbers from the US. In Canada, again, the numbers were out as well, but they were not amazingly well, really. So if we look at the pound dollar, like, why is it not going lower? Again, the headline number was 313, which was much better than anticipated, but wage growth was lower than expected. So 2.6 in wage growth. So this is not something that the Fed really likes too much. So that's why you're not seeing this breaking down. The trend is bearish though, so it might still go down. But from a trading perspective, we don't have that opportunity. Here the dollar CAD moved down slightly on the news, but I think if you look again at the Canadian numbers, they're not really that good. Let's see if I can reload the economic calendar here. Just give me a second as the software is loading. Just a sec. Okay, so here are the numbers. Here are the numbers. Change from payrolls 313. That's good. Unemployment rate in Canada 5.8. That's a bit better. But the unemployment rate in the US is 5.1, which is not bad, but it's not good. And then in the US, you have wage growth 2.6 versus 2.8 anticipated. So I would argue that the US numbers are not, they're not good. They're not they're not good at all, but they're not necessarily very bad. And then from Canada, slightly better, and the headline number from Canada, 15 versus 21. So again, slightly mixed report. Um, so what can we say about this? Pound dollar probably is not going to break the low. Dollar CAD is going to the downside on these numbers. I think if we kind of look at both of the numbers, the fact that the unemployment was slightly better than Canada, I suspect that this is going to continue to go to the downside. This, I wouldn't get involved here. I mean, it could go to the downside. I mean, that's what's going on, right? But I don't really think that we should focus too much on those two. So I think these two are probably the best, which is the dollar CAD. So what are traders doing here? Probably as long as trade below this high, which is 129.63, this market could move to the downside. Risk reward wise, this is a risk of 128 pip. I suspect that maybe in a few days we can potentially go down to 127.22 down here. Okay, let's see here. Do we have any questions? Then feel free to just ask me. Hey Elia, good to see you. Thanks so much for joining us today. So again, the numbers mixed, but or not good from the US. So I think we see some more dollar weakness, and I think the dollar CAD could go slightly lower. We can take a look, of course, on some of the other pairs, give you an idea what's going on. So this is the euro. The euro, you know, it's moving up a tiny bit. I mean, it needed to go up anyway because of yesterday's decline. Dollar yen, you know, spiking a little bit higher. I think this people are just confused here, and you know, so I don't think it makes sense to watch that. Aussie dollar versus the USD is going up here. Again, it looks at least now that the market is interpreting the numbers as bad from the US, which I agree with. Gold spike a little bit to the downside. There's no real reason for gold to gain at all. S&P 500 is moving higher. I think people are looking at this and say, all right, the headline number were good, so you'll have more people joining the labor market. However, wage growth isn't too high, and because of that, you know, most likely these companies can continue to make good money. And there's no major risk right now that maybe the Fed is aggressively going to increase interest rates. Obviously, they're still probably going to increase interest rates 3 times this year, but that fear that they're going to increase 4 times is probably out the window. We can take a look at things like the euro yen as well. Euro yen though is more, it's very hard to kind of work with this. Maybe we can say euro yen is going up because stock markets are going up. So I think the only thing really interesting right now is the dollar CAD. Dollar CAD uses both of these numbers. It's using the bad numbers from the US and the slightly better numbers from Canada. Okay, do we have any questions? Otherwise, I think we're going to wrap things up. I think in the short term, if we have a little bounce, that wouldn't be too surprising. Fibonacci from the very high to the low. That shows you these levels here. Eventually, if we stay down here, I think traders will reduce stop loss orders. There's a tighter level, which is this one here, which is 129.15. It's probably the level that most sort of scalpers are working with. In the question box, if you want me to take a look at any markets related to this, then feel free to do so. Okay guys, I think we're going to wrap things up. I want to thank you so much for joining me today, and I hope you have a great weekend. And if you're trading, best of luck. Talk soon, and feel free to join me here for a quick update on the markets in the live trading room Monday to Friday. Have a good day. Thank you.